Welcome back to the channel, everyone, and thank you for tuning in to another great video. Today, let's talk about candlestick momentum, what to look for when we are actually trading the future markets, okay? Now, you guys know that I've been following the channel that I'm a scalper. I trade supply and demand. That's my preference of how I trade. Whatever works for you, I'm going to start off and say, trade the way that works for you, okay? Whatever makes you consistently profitable. At the end of the day, trade what just works out for you in your favor, okay? Now, I trade range-based charts. I don't trade time-based or tick-based or volume-based charts, and please don't ask me why, because people ask me that all the time. I've said it time and time on my videos. I'm going to just say it for the last time. Simply being, the fact is, it's just cleaner to the eye. No specific reason why, okay? Just cleaner to the eye and how I perceive my charts, okay? Now, momentum trading or following price action and looking at the candles is important, okay? Do I sit here and read, looking for actual patterns when it comes to different types of candles, dojis and hammers and all those et ceteras or whatever the case is? I know about them, but I don't specifically make it a part of my actual trading. I just can be able to, I'm able to tell and looking at, when candles retrace or return, or I should say candles, when the market retraces or returns back to a key zone, supply or demand, I'm looking at the candlestick momentum, all right? Meaning when it returns to the zone and taps into it for the first time. Because as I always talk about, my high probability setup surround price pulling back to a key area where there's a gap at. And there's a reason for that, okay? The market's moving heavily in one particular direction, up or down, leaving a gap. It's probably more likely orders to be filled. And we're talking about the banks and the institutions leaving those breadcrumbs back behind. All right. So in this video here, I want to talk about, show a couple of things. Okay. A couple of examples in a sense. All right. Examples where the market taps into the zone and it may pull a little deeper into the zone. And sometimes we'll get or have an area where there's a gap resting inside of the zone. That may be an area of interest or topic or question you may have. And sometimes the market will come and tap that gap in between or inside that zone. As I stated before, at some point or another, the market is going to fill all gaps. It has to fill them, even gaps or inside of a zone, okay? But when we're trading supply and demand, this preference of how I actually trade, I'm looking for pullbacks to the zone. And if the market taps in for the first time, right the moment it taps into the zone and then moves away from it, then with lots of momentum, then I'm interested, okay? It doesn't have to really come all the way inside and fill that gap that may be inside the zone, because sometimes that may not happen. It may just tap the zone and move away quick enough. And I'm going to show you an example right here what I'm talking about, and then we'll look at some examples where the market goes a little bit deeper, taps into the gap, okay? Now, these type things can look a little different depending on the time, the chart style you actually trade from. You trade in time-based charts, you may not see gaps inside the zone. It just depends on your charts, okay? And I don't ask me as far as like, well, what does it look like on a time-based in comparison to range-based charts? I don't know because I don't trade time-based charts. I only trade and form my strategy of how I trade surrounding range-based charts, okay? So do yourself the favor when I say this. Pay attention very closely to what takes place when the market comes back to your zone, okay? In reference to the candlesticks, all right? So this here is an example of a demand zone, okay? Yeah, we see what happens. You have a supply sitting up here, demand sitting up here. And sometimes, you hear me talk about taking trades from demand to supply and demand, because you get those setups that happen, especially when you have, say, for instance, like a situation right here where you have a high and a low right here and the market's ranging, okay? Or starting to develop a range, and we don't know if it's going to break to the upside or break to the downside. But in this example, I'm going to show you right here. Look what happens. We have a low taking place right here. The market breaks up and it takes out this area of structure right here at 1512 and a half, say for instance, okay? Now, we know this is a demand zone. Why? Because we have aggressive buying, green candle, green candle, green candle, follow through with the break of the structure to the upside, right? The market returns back to the zone. Look, you have to be able to see and identify the zones first and foremost and understand and looking at studying market structure and price action. Those are the essential core elements or keys that are very important, all right, to trading, okay? The second biggest thing I would say is waiting patiently for price or the market to return to your zone, okay? And sizing up those areas before the market gets back to that area. Meaning, study price action as it's returning back to that zone to see if it's going to be tradable or not. A lot of people now they're just focusing on the zones and not really paying attention close to price action to be able to understand what took place. Were there swings that broke through other areas of supply? Other areas of structure on the way down. Okay, you got, and then when the market taps into that zone, how much area do you have, if at all, to check a trade from? Okay, so basically the market pulls back to this area right here. All right, now this is the high up here, where price broke, at the price broke structure right here, making this high right here. But the ultimate high is resting right here. Okay, so price pulls back to the zone. Watch what happens as the market pulls back to the zone. It makes a low, lower high, and then it taps into the zone. This red candle here isn't the candle that taps into the zone, but it could have been. Either or, it could have been this red candle that came and tapped right here to the zone, meaning the top end of where the zone is, right here where this blue line is, the bottom, which is blue line of the rectangle box, and the blue line of the bottom end of the box is the zone. The top line is the top end of the zone. Now, the red candle closed right here, not tapping into the zone yet, but the green candle did. Now, the green candle didn't close inside the zone, okay? What it did, it came down there and wicked. The moment it tapped into the zone, it started pulling away from it, or moving away from it, I should say, okay? And when I see things like this, you guys know I trade aggressively sometimes because I'm looking at candlesticks or how the market is approaching that zone, meaning looking at momentum. Is there going to be momentum once once the market taps into the zone and it quickly moves away? If it taps into that zone for the first time, especially with the wick of a candle, meaning, when the market is coming down here and this candle we see forming right here, this green candle, it may have started forming green to the downside right here. I'm sure it was. Or it could have been red. I'm not sure. We don't know at that time. But either way, the way it actually closed, if you pay close attention, it starts to move away. Okay? And the moment it starts to move back in the other direction, that's momentum for force going to the upside here. And then this area of this candlestick right here, with the zone moving away from it quick enough, and it forms a bullish hammer to the upside. Okay? That's a lot of momentum. That's enough momentum for me as an aggressive trader to jump into the trade, because it didn't close within the zone, okay? The first touch of the zone, it came into it and then quickly moved in the opposite direction, all right? And forming this bullish hammer and leaving a wick behind. The next candle was a full, bullish momentum candle to the upside. So you can wait for the candle close above here, okay? As I talk about in many videos, you look for the break or the close of the candle above the red candle here. But the way and how I trade, because I'm aggressive and I'm paying attention to how the market is responding when it gets back to the zone for the first time. In the first candle that taps into the zone, what's happening? Is it closing inside that zone, or does it come in there, turn back around, and start moving heavily on with lots of momentum to the upside? That's what this bullish candle did, leaving behind that wick and with lots of bullish momentum moving to the upside. So that's enough momentum for me to want to get into the trade aggressively and take the trade back up to the highs up here, okay? Or at least for it to run the high up here. So if I got into the trade, say for instance right here at 208, and this was a trade I did take a couple of days ago, because I had the zone marked up at 208 and a half, then I could take this trade comfortably back up to 216 and a half. So I'm picking myself up 8 points right there. Pretty easy, right? 208 and a half to 216 and a half. Okay. Again, that's because a bullish candle at this time, it could have been a bearish candle. I'm not sure, but either way, it didn't close in there. It quickly moved away from the zone real quick with lots of force to the upside. So, with that momentum behind that candlestick, I can get into the trade. Okay. If you're more conservative, then wait for the candle break above the red candle here. This last red down candle. That last red down candle didn't tap into the zone. It was the next candle that did. Okay. Now, let's look at some examples of what takes place. And let's talk about this as well, why I have this here. Now, there's a gap right here. The gap inside the zone is going to be the top end of this green candle here to the bottom end of this third bullish candle right here, the bottom end of that wick right there, a small gap right there. Now, what the market did, it actually came into the zone here, okay? It came into the zone here, and it actually filled in that gap right there. Sometimes we won't get that. Now, I'm going to say this. Instances where you see the market, let's say this red candle was coming to the downside right here. It wicked the zone, okay, or hit the zone for the first time, and then turned back around and started moving to the upside with bullish momentum to the upside. And it actually closed to the upside where there was an actual wick, okay, meaning it wicked the zone and moved up, okay. It didn't come into the zone. Sometimes, you know, it won't come into the zone and feel that actual little gap resting in there. It may just hit the top end of that supply zone and move away from it real quickly. Coming to there, the first tap, turning back around, moving to the upside, wick tap. So ultimately, in the end, what you're going to see is the wick. Once that candle closes, is the wick is going to look like it tapped that zone and then moved away from it. Those are the type of setups I really like to see. Is when a bullish candle is coming down, and this could have been a bullish candle. I'm not sure, but by looking at it, it wasn't. It was definitely I'm sorry, guys, a bearish candle. By looking at it, it was a bullish candle that formed here. Now, it could have been a bearish candle that, you know, may have at that time looked like it was forming there and then turned to a bullish candle. You know, really don't know. And without going back and taking a look at it, and I'm not doing any kind of market replay here, but I'm just telling you and looking at the reason why I got into that trade is because this candle, the bearish candle, didn't tap into the zone. This bullish candle did, okay? All right, it tapped into the zone, but it turned quickly away and moved away, okay? All right, it came into the zone, filled that gap, and then turned quickly away, leaving that wick right there. When I see them again, the market moving and pulling away from it, and the candle is now shifting to the upside with bullish momentum or force, I'm going to get into that trade. Okay. Now, again, if the market may not come in here and tap into and fill that little gap on the inside of the zone, it may just come and tap the top end of the zone, turn back around. You see a wick that starts to form, and the candle starts to move to the upside, you know, quick enough that I'm going to get in that type of trade. All right. So let's take a look at a couple other examples right quick. All right. So here's a supply zone setup. Okay. Now, in this instance here, we have a bullish candle moving into or retracing back and moving into the zone. It taps into, there is a gap right here at the bottom end of the supply zone right here to this candle. Here is a gap right there, but it's also a small little gap inside the zone. Now, you can wait patiently for the market to tap into the gap, inside the zone. And lots of times it will. It'll come in there and fill that gap inside the zones. Sometimes, again, it will just do this right here. Let me give you just an example. I'm going to try to find one to where it just kind of wicks it and moves away. But let's say it pushed up, and this was a green candle right here, okay? It just taps the bottom end of the zone right here, and then, boom, wicks away from it, okay? And it's showing that at that point, you may get a bearish candle that moves away from it to the downside and closes, okay? So if you see where the market just taps the zone and quickly moves away from it, that's bearish momentum. That's a sign that the market is definitely heavily rejecting that zone. Now, in this case here, the market moves into the zone and closes and fills in any gap inside the zone as well. That's when we really have to start paying attention to the price action and really see or to identify the market's going to reject that zone. It fills the gap. Bullish candle closes to the upside. The next candle is a bearish candle. What we're waiting for, this is just a typical example of what I talk about, is the break of a candle in the opposite direction. You know, it closes down in this, you know, the second candle closes breaking below here. Then you get to the trade, right? Okay. That's just the ordinary or typical example I talk about, all right? Because lots of times the market will tap into that area inside the zone if there's a gap there and fill it, okay? More than likely, all right? So let me see if I can find an example here to where it actually just touches it and then moves away from it, okay? Now, as I showed you in this example here, right here, but this was a bullish candle that came into the zone here and then moved away from it. What we like to see sometimes, most times, what will happen, you'll see like this bearish candle come in there, tap it for the first time, and then move away. So let's see if I can find an example like that. Okay, so here's another example here, okay? What you see here is break a structure to the upside, taking out this high right here. The market retraces back. This right here is the zone we're focusing in on, the demand zone. And it could be a supply zone just as well that this happens at. This red candle didn't come back down and touch this, and it could have been a red candle at that time that was moving lower, but this ended up being a bullish candle to the upside there. But either way, we got another instance to where the market retraced back, all right, tap into the zone. It taps into it. It does move a little bit inside the zone, but again, pay attention to the momentum behind what takes place with the candlestick itself. taps into the zone. It doesn't come back in here and fill in every bit of this gap on the inside right here. It taps the actual supply zone. The key thing is looking for the gap at the supply zone. Even if we have a gap on the inside of the zone, not all times is it going to come in there and fill that gap right then on the first touch. As you can see here, eventually it does come back down and fills in the inside, even the gap on the inside, and then runs back up a little bit there. But that could have been for a second test. You can wait for opportunities like that. But you guys know that I primarily, if I want to see price react on the first attempt, okay, to where it is, that zone has not been tapped into, okay, that makes it a high probability setup for me. Where's the gap at where the market has not tapped into it yet, regardless if it taps into the gap on the inside or just taps the zone. If it just taps the zone and move away, I am interested in, because it has not tapped the zone at all firsthand. And once it comes in and fills the gap back at the demand zone, okay, right there at the top end, where the market broke higher above that last bearish candle, there's a gap. There's actually, if you look, there's actually a significant gap here from here, the top end here. I'm using the blue. Let's do this. Just say from here, and then when the market was pushing higher and it started retracing back, it'd have been like right here. Okay, so you got that much gap in between. Okay, then it comes back and fills the gap back to the actual zone itself. Now there's gaps, in the inside, which is primarily fair value gaps that occurred on the inside of the actual zone itself. That's what I'm talking about when I'm referring to the gaps on the inside of the zone, meaning the gap from the top end of this green candle and the bottom end of this green candle right here, the third candle. There's a gap right there. And not all instances will the market come back immediately and fill every bit of that gap. As long as it rejects at the actual zone for the first time, okay, on the first approach to the demand zone or supply zone, I'm interested, but I'm paying attention to the candle momentum, okay? So when the market comes back there, it doesn't dive deep into the zone, come any deeper to fill the gap there. It immediately starts rejecting, okay? If you see here, it comes into it, taps the zone, doesn't go deep into it, and then quickly starts to move away, all right? And then, boom, it's a bullish candle to the upside, leaving this wick here. That's a lot. To me, that's momentum force to the upside, and it carries through. Momentum candle here, all the way back to the upside, breaking that high. So, me being an aggressive trader, I'm more likely going to get in here at 324, okay? I talk about being, again, a conservative and looking for the break above the candle, meaning the last bearish candle to the downside, and closing to take a trade as well. That's kind of a safety net, all right, for those that aren't, really, that haven't spent or have enough time experience understanding certain things and want to take things, really at a slower pace and not, have that aggressive mentality or personality to be able to trade like that. You have to really know what you're doing, and you have to know that this right here in all instances may not end up working out. We don't control the market. So if I got in on this trade right here because of this bullish candle to the upside here, and in my mind, I'm starting to think, okay, momentum is picking up after rejecting the zone for the first time. I'm in, and then it starts to come against me, and I see the closure of a red candle, and then the body forming of another red candle to the downside. I'm getting in before it hits my stop loss. I'm getting out before it hits my stop loss to preserve capital, okay? So you have to be able to study this stuff, guys. Price action is very important in understanding what's going on, all right? And paying attention to momentum falling behind candles as well, all right? Especially when the market comes back to those zones. So if the market comes down, taps the zone for the first time, and wicks away from it, could be a sign of momentum to the upside at a demand zone, or a sign of momentum to the downside at an area of supply. Pay attention to those type things. If the market breaks deeper into the zone, okay, and sometimes it will, it'll tap the zone for the first time. It may want to come in and immediately start filling in any areas of gaps on the inside. That's fine if it does it, but pay attention to price action and the candles specifically, because then you may get a red candle closing to the downside inside the zone, fills the gaps there, and then you got to start paying attention to the candles to see if momentum is going to start to pick back up to the upside to get into a trade. Okay, just don't wait for it to close on the inside and then the next candle closes again on the inside, bearish to the downside. That could be a sign that the market is really trying to push lower. So pay attention to the price action as if the market pulls in deeper inside the zone. But for me, again, if it taps the zone for the first time, barely comes into it, let's say it taps it to the tick, or taps it and comes in just 2 or 3 ticks and then moves away, no candle closure on the inside, to me, that's momentum force to the upside, or it could be to the downside with supply. But that's all I want to talk about today, guys. Is really just paying attention to candlestick momentum. When price gets back, or the market gets back to the zone, pay close attention to what's going on as when the market taps into the zone. What's going to happen? Your eyes have got to be glued there. That's going to kind of give you a telltale sign of when to get in. And sometimes you don't have to wait for that full-on rejection of an M or W structure like most people talk about, most traders talk about. You can, but sometimes if you do that, then you may, that's more conservative style trading, to where you're actually waiting for a clear definition. There's nothing wrong with that to give you more confirmation to get the trade. But you may have missed a few ticks or a few points. Nothing wrong with that. You just got to size up that area too to know how much room do you got to trade? When you get to that trade, what's right above you? Looking at price action. Is something going to stop me the moment I get to that trade? Or should I have not taken that trade at all because it's just not a good area? Even though it may be a demand zone, what took place on the way back down? Did it break some areas of supply coming back down? And now I have, say resistance right above me or support right below me. You got to pay attention, guys. You got to understand that it's just not all about paying attention to just the supply and the demand zone. You may have got that part, but the part you're missing is being able to understand market structure and read price action the correct way. I'm going to leave you guys with that. If you're interested in joining the Discord community, please do so by finding the link down in the description portion of the video. If you're not a sub or current subscriber to the channel, what are you waiting on? Videos like this, content like this, valuable information I'm sharing with people across the platform here for free. It's covered in all my videos, guys, okay? All across. I have over 600 videos on the channel, so to spend some time watching the videos, and you can basically teach yourself in grasping information how to trade supply and demand. It's simple put and easy as possible. Some people may take a little longer to learn it. Some people may not. It just depends on the person's learning curve and how they learn, okay? But please do yourself the favor, okay? Not me, but do yourself the favor and subscribe to the channel, okay? So you can pick up this valuable information. Also, to make sure to turn on all your post notifications so that you're informed when good, valuable content videos like this drop on the channel as well. And last but not least, the thing I would like for you to do for me and for the entire community is drop a like on the video. Take care. I'll see everyone in the next trading, or the next video, I should say. I'm going to get over and start looking at the markets now, start engaging with the Discord community, and see if we can pick up a few points today and take home some profit. Take care. See everyone in the next one.